Of course, as we mentioned, this is China's first golden week post-COVID. What are your expectations for spending now, and what is it going to tell us about the consumption story?
Look, it'll be interesting to see. We understand that, there's been a great resurgence in domestic tourism activity, albeit though my understanding anecdotally is that's still down on last year, somewhere sort of circa around 80% last year's volumes. And interestingly, that tracks pretty well what we're seeing in terms of foot traffic back in retail, which is also still tracking at about 80% of last year. So not fully recovered in terms of retail spending. So I think it'll be a good period, but I suspect it will still be net down on last year, given just what we're seeing in terms of the broader retail macro economy in China, where retail's almost back, slightly down, but almost back to previous levels. Obviously, the big story is online continues to be up somewhere between 19–20%, but offline retail is still down at sort of 9–10%, depending on the category.
Yeah, this recovery that we've seen, it's gone better towards the middle part of the year, but the recovery in consumption is still uneven. There's been an over-reliance on luxury goods as well. Melanie, are you seeing that the Chinese are willing to and able to spend more on discretionary items now?
It's still very mixed. As you probably have seen yourself, the essentials categories held up well, both during the height of the coronavirus period in January, February. And then what we're doing is tracking how they're looking sort of month on month. The most obvious discretionary category, apparel, is back in growth, having been down around 30% at the peak of the health crisis, now back in growth at about 4%. But as you say, luxury looks like it's been much more resilient. Jewelry at the moment is up 15% year on year. And what we're seeing is luxury also doing something fairly similar. A lot of that, we think, is basically being underpinned by onshoring of luxury demand, as obviously the Chinese cannot travel at the moment, and so a lot of that spending is happening in the domestic market.
How about spending in the rural areas, Melanie? Because we know that spending in the rural areas has been rising, but that took a turn during the pandemic period. How well supported is that? What's the recovery looking like?
Yeah, that's really interesting. We are looking forward to 11/11, of course, as the next barometer of what the recovery looks like. And we did a little bit of research to understand what we think is going to happen. When we asked consumers in Tier 1 and Tier 2 and Tier 3, 4 cities, both consumers said that they're expecting to spend more coming into this period. But what we have seen is as the penetration game in 11/11 has shifted away from penetration in top-tier cities where it's already quite high, and so there's less headroom for more penetration. In the Tier 3 and 4 cities where there's a lot more growth expected, those consumers do tend to spend less. And so whilst we're going to see, we expect quite a lot of activity, buoyant activity around 11/11, we do expect the actual level of spending to come down as the Tier 3 cities and 4 cities take on more of the spending, but at a lower basket size.
How about in terms of online sales? We know that numbers have been encouraging, but in terms of margins, what could we be looking at? Because pretty much retailers are selling at great discounts.
Yeah, look, I think we're going to see that discounting activity continue. And so I do expect that both at 11/11, which will be an interesting barometer, but more generally, discounting is going to stay heightened. And so margins are going to be under pressure for all retailers as they try and sort of win the consumer back into their store, particularly in a slightly kind of lower on average retail environment in terms of sales and growth.
What's still needed to jumpstart consumption then, Melanie? Is it more stimulus that we need from policymakers, particularly when it comes to some of these poor Chinese who remain cautious?
Look, I think it's going to be a combination of getting foot traffic back in stores. As I said, it's still down considerably. A lot of that will be health concerns about just getting out now that restrictions are easing considerably for mainland China. And I think the other thing will be that we know that the consumer is feeling indebted. Structurally, before coronavirus hit, China was approaching one of the most extreme economies, second to the US, in terms of income disparity as measured by the Gini index that the World Bank uses. It was getting close to the US, and one can only imagine with coronavirus hitting that divide between rich and poor has become more extreme. And so I think, there's going to be some period where the consumer just is very cautious about spending. I expect that will persist for some time.
And you mentioned about the e-commerce space. There's a lot of talk about fulfillment centers across the region. Of course, they have to deal with multiple sourcing options, different languages, different customs laws as well. What sort of approach actually works in this region, if you look even just beyond China?
Yeah, look, there isn't a one-size-fits-all. We've just recently published a Future of Retail for Asia Thriving at High Speed. And one of the things we talk about there is the fact that the underlying characteristics in any urban market across our Asian landscape are just so different, whether it's labor rates, congestion, the cost of logistics, the cost of capital, the cost of real estate is just so different. And so we see very different last mile models emerging in different markets. In China, we've seen in some of the bigger cities where actually congestion is high, but labor rates are low and real estate sort of affordable, that we've seen a lot of what we call hyper-local fulfillment from out of stores using scooters and bikes and small vans. Contrast that with somewhere like Seoul, where there's a lot more investment in automation, much larger DCs, and a very different model where it's very much one large single DC that we're seeing retailers fulfill out of, as opposed to fulfilling out of smalls and just doing small stores and doing short runs to their customers. So it is definitely not a one-size-fits-all when it comes to the last mile dynamic that everybody's had to sort of surge to meet the demand in recent months.
Melanie, I'm just curious about the broader retail trends as a result of COVID-19 in terms of consumer preferences. How long-lasting will they be? Because we've heard reports about how, consumers are buying pretty much sneakers and gym wear. Post-COVID, will those trends continue? What will stay? What won't?
A lot of the trends we're seeing have been around for a while. It's just that COVID has really accelerated them. We always had the acceleration to online. As we've seen, it's surged, but it's actually stayed high even as foot traffic has come back. We've seen the path to purchase fragment as all of our eyeballs and attention have gone onto super apps, onto social commerce and so on. And again, that surged, and the big feature of this period has been live streaming, which I think as a sales channel is going to stay. There was a underlying trend towards health and wellness. Again, we expect that will stay. And as you said, obviously a big surge as we were all housebound and looking for ways to exercise at home. So a lot of these things have had long-term trends towards them, but coronavirus has just really embedded those trends. And on that basis, we think some of this is really around to stay. We don't think that we're going to revert back to online sort of declining. We think this trend around sort of health and wellness will stay. The fact that we're all using mobile commerce predominantly now to do a lot of our shopping will continue to be a big feature of the way that the consumer shops in future.